Folks, I'm going to talk about two hot medical stocks that are on my radar right now. What do I always say? Let's get into it right now. So with the pandemic rearing its ugly head again for the second time this year, it appears that economy is going to potentially set up for another defensive cycle. That doesn't mean I'm expecting a major bear market, but I'm expecting consumer discretionary sectors to cool off and defensive sectors to pick up steam, especially as we head into the elections and the second part of what could be a disappointing second half of 2020. There's two major theories of investing and trading that will get us past the current cycle. One, we have to pick stocks that were doing extremely well prior to COVID-19 pandemic. And two, we've got to select stocks that are benefiting over and over the past few quarters. Gauging the market long-term right now is next to impossible. But figuring out where institutional investors will put their money over the next few quarters is easier because the selection criteria is much different. When you've got a runaway bull market, all stocks go up. But now investors are increasingly selective and are pickier with their selection criteria than ever before, which means stocks that are truly good investment ideas will rise. But weaker stocks won't attract the necessary market cap. In other words, if you know where to look, it's easier than ever to find winning stocks. Now, one sector that's going to see more upside and is less dependent on the consumer's discretionary funds is the healthcare sector. And that's the sector we're focusing on today. Now, the first stock on my list is Livongo Health, ticker symbol LVGO. Livongo Health is a consumer digital company. It offers the Livongo platform, which leverages data science and technology for people with chronic conditions. Now, diabetes, folks, it's not going away anywhere anytime soon. And there's over 35 million people in the US suffering. And even more with pre-diabetes. I think it's 100 million. It's huge. Livongo creates a high-tech platform that meters glucose wirelessly. This improves and has been giving dramatic as the growing number of health insurance plans are incorporating the method into their program. Livongo's membership base doubled to 330,000 members over the past year, and the stock has been climbing. The stock is up 88% over the past 12 months. It's got 4 positive earnings surprises and 4 positive quarters of estimates, which drives institutional buyers into the stock. The stock has had 9 strong buy recommendations, and the short-term price target is $95 per share, substantially above current value. The next stock on my list is Align Technology, ticker symbol ALGN. This stock is a leader in dental aligners, which replaces the old metal braces and models and reduces trauma and increases in aesthetics. Growth has been persistent, double-digit annually over the past 4 years, and free cash has grown to over 82%. 5-year return for investors has been over 300%. Not bad, right? And the last 5 years, the revenue is up 216%. Earnings surprises have been largely positive the last 4 quarters, and stock has 6 strong buy recommendations. The short-term price target is $350 per share, and I'm expecting higher momentum second part of the year as a result of more capital influx going into the healthcare sector and away from consumer discretionary stocks like tech and chips. Hope that helps.